Hello everyone, in today's video we are going to talk about Bitcoin, specifically the Bitcoin ETF.
BlackRock, the largest asset manager in the world, filed to offer a spot Bitcoin ETF, sparking competition as other Wall Street players rushed to submit filings shortly after. Other big investment firms like Fidelity, ARK, Invesco, and WisdomTree also hope to take advantage of Bitcoin's reputation as digital gold.
In making that long-awaited ETF a lot more likely. We're very close right now. Joining us now, someone's very much got a dog in that fight. ARK Invest CEO Cathie Wood. Cathie, you're one of 9 applicants for a spot Bitcoin ETF. It looks like the SEC is going to be forced to approve a spot Bitcoin ETF. What, if any, communications have you had with the SEC about your application? Where are we in this whole thing?
Well, it was publicized and disclosed. I think it was last week that we had responded to the SEC's request for information around our Bitcoin filing, and we responded. And that's basically all we can say. I think many people think the fact that the SEC chose to ask questions is a change in behavior. And therefore, I do think hopes are rising that a number of Bitcoin ETFs will be approved.
Asset management giant BlackRock took the first steps yesterday to launch a spot Bitcoin ETF, filing an application with the SEC to launch the iShares Bitcoin Trust. If approved, this ETF would allow easy access for investors to get exposure to crypto in a product from one of Wall Street's largest companies. And while Bitcoin bulls remain optimistic, the SEC has resisted allowing a spot Bitcoin ETF in the U.S. It's currently in a legal battle with Grayscale over whether the firm will be allowed to convert its Bitcoin ETF fund into an ETF, the GBTC. A decision in that case is expected later on this year.
As you can see, there's a large interest in getting this Bitcoin ETF to the masses. And this almost came true, especially for today, October 16, 2023. There was a rumor about SEC approving BlackRock's application for the Bitcoin ETF. What happened was that crypto news outlet Cointelegraph had earlier reported that the US SEC had approved an application by major asset manager BlackRock for a spot Bitcoin ETF, before later retracting the story. And this news caused the Bitcoin to briefly hit $30,000 before pulling back when the news was retracted. And BlackRock also denied this news and said that SEC has not approved their application, and that their application is still under review by the SEC. So what's the big deal about having a Bitcoin ETF? Well, let's see what the experts has to say.
If you invest in a spot Bitcoin ETF, you're not directly buying Bitcoin. You're buying shares of a fund that basically holds Bitcoin.
The idea of a spot Bitcoin ETF isn't new. A decade ago, the Winklevoss twins filed for their own spot Bitcoin ETF called the Winklevoss Bitcoin Trust, but ultimately failed. And right now, if American investors want Bitcoin exposure on regulated exchanges, the closest option would be a futures ETF.
No spot Bitcoin ETF has been approved by the SEC, at least not yet. There are several futures Bitcoin ETFs that are trading. These futures Bitcoin ETFs are backed by Bitcoin futures contracts.
An ETF, like the ones that exist, a ProShare product, for example, tracks the price performance of the underlying futures, which track Bitcoin. So, kind of the benefit of that is liquidity and regulation. But the downside of that is that the futures have a cost, implicit cost themselves. They may or may not track the actual spot price of Bitcoin, but it's the closest thing to it.
Simply put, the futures ETFs don't require an underlying holding of Bitcoin since they're backed by futures contracts. But a spot Bitcoin ETF could change how Wall Street buys into the cryptocurrency. And the big question is, if approved, how will this affect markets?
If investors bought $100 million of a spot Bitcoin ETF, the ETF would be obliged to go out and buy roughly $100 million in Bitcoin, minus fees, of course. The entity responsible for holding the asset is called a custodian.
If you get products like ETFs out there, which are then regulated, trade on an exchange, you kind of have your your bid-ask spread on a daily basis. You can monitor trading efficiency. You can see the transparency of what is in the ETF and what the cost is. That will open up, certainly the ability and use case for larger institutions to deploy Bitcoin into their portfolios that might not have done it before.
And use in investments like retirement accounts could drive huge gains in Bitcoin's market cap.
I think there's almost 40 trillion of retirement assets. And you can imagine a scenario where 5 to 10% of those assets end up becoming allocated to Bitcoin. 10% of a $40 trillion retirement assets, that's $4 trillion. The total current market cap of all cryptocurrencies is around 1 trillion. So that would be 4 times the size of, of the current market cap.
Why would BlackRock do this if it seems likely, or if the chances of it being unsuccessful are relatively high? Why would BlackRock do this? And the answer is because there is a big benefit to being first. I mean, remember back in November 2021, when the SEC approved the first Bitcoin futures ETFs, the very first one, ProShares, was, I think, the most successful first day launch of an ETF ever. It brought in more than $1 billion. Subsequent ones that launched a couple days or a couple weeks later are in middling around $50 million AUM, while ProShares has gone up and down, but even today it's still, when I last checked, is above $1 billion. So that's a significant amount of money in management fees that BlackRock can get. So the risk reward there is pretty high.
The desire for a spot market Bitcoin ETF stems from the idea that many people, firms, and funds who are interested in taking on exposure to Bitcoin are not able to do so yet. But if a spot Bitcoin ETF was to emerge, then the general public will be more receptive to invest in it, since we are all more familiar with ETFs. And some estimate billions of dollars could flow into a spot market Bitcoin ETF. At least that's the theory. The funny thing is that the SEC has rejected every spot-based Bitcoin ETF application that it has seen. It started with the Winklevoss twins, which started this ETF thing back in 2013. If you don't know who they are, Google them. They're very big in Bitcoin. Grayscale, a sister company of Coinbase, also filed an application previously for a spot ETF, but was rejected. Grayscale appealed this, and then a panel of judges agreed that the SEC failed to prove why a Bitcoin ETF was any more dangerous than the futures products that we have right now. Well, so far the SEC hasn't responded by the deadline, which means Grayscale application is still back in play. But don't think this is an easy road for Grayscale. They have a lot of competition, which includes BlackRock, the huge asset manager, Fidelity, and others coming into the space. But given BlackRock's huge size and reputation, I'm sure the SEC would rather give it to them and let them test the market than to smaller players. And to me, I would rather have BlackRock be the first, since they have the capital to stabilize or right the wrong if anything goes tits up, as the British says. So if Bitcoin ETF do get approved sometime in the early part of 2024, what do you think will happen to the price of Bitcoin? Please leave your comments below. I would love to hear what you think. Of course, there are some out there who thinks Bitcoin price will fly to the moon. Now listen to one of the YouTubers out there who compared it with the gold ETF.
Bitcoin. What happens to the cryptocurrency market if and when BlackRock's Spot Bitcoin ETF gets approved? Well, here's what happened to gold. This is the exact day the first gold ETF listed on the New York Stock Exchange. You can see what happened. If a spot Bitcoin ETF is traded on US exchanges, if it is approved, this will imply a skyrocketing Bitcoin price, as we have learned from the example of gold. Bitcoin and gold have similar properties. Bitcoin is a better gold. The New York Stock Exchange listed the first gold ETF in 2004. Since then, the gold price has never saw the November 2004 level again. Gold, with a market cap of $1 trillion at the time, has now reached $11 trillion. That's an easy 10x.
Well, that's it for today's video. Hope you enjoyed it. Please smash that like button and subscribe to this channel. And I hope to see you soon. Take care, everyone.